Okay, we're back for another episode of Expandable.
Right.
All right. So, I don't think that business owners typically, maybe the more savvy business owners who have been in business for a long time, have multiple businesses, are just, more financially minded, think this way. But I don't think your typical business owner, entrepreneur thinks about a bank necessarily being a resource or being a strategic partner that can help you with growth.
Yeah, and probably even the newer generations, the ones coming out and starting business, the 20 and 30s, so much of the resources they can just search online and get it, or they get it from influencers. I don't know, but
Google, YouTube.
The majority of the financial influencers on Instagram are so full of shit. All they do is want to sell you, that $100 plan.
Yeah, they're just selling.
Obviously, there's some good ones out there, but for the most part, they're pretty horrible. And I want to like them to see their content and see. And
I agree.
Yeah.
There's not a lot of substance there. There's not a ton of
especially
experience.
in like the real estate flipping, zero down and go through this, and you're thinking you're building a house of cards.
Yeah.
And that's fine when you have nothing, you're risking nothing.
Right.
But you can only go to that well once.
A lot of those are I call them like flash in the pan. They're going to make a little bit or a lot of money quickly, and that's about it, because they kind of have this surface level knowledge to sell, and they package it well.
Nothing sustainable that they can build on. But it's that one time.
Yeah, and maybe some of them out there do have some more depth, but I think in general, a lot of them don't have that depth of experience that you get from leadership and a team, a full-on team that comes with a bank partnership. They haven't looked at thousands of financials of businesses, right?
No, and
like bankers have.
And when you're dealing with smaller banks that have actual lenders in your community and have presidents and that are easily accessible to their customers and executives, that's a fantastic resource. I mean,
let's make that distinction first. I think we're not talking about big banks or even regional banks. We're talking about smaller banks that know their customer intimately and want to be involved in the community of what's happening with the growth of those businesses. So that's really what we're speaking to.
Yes.
And those small to mid-sized businesses who are expanding and growing, that need that insight and they need that experience that a banker can give them about the community, about their business. That's really what we're talking about, not big banks or big, huge companies.
Correct. And, that banker has seen, businesses come and go over the years, whether they borrowed money or not borrowed money, which ones succeeded, which ones failed. And over time, they should develop a reason, why they did, or you see patterns of who's going to succeed and who's not. So, I mean, it is an absolute resource to talk to your bankers.
Yeah, and they see all kinds of businesses across the board, and they look at financials across the board. I mean, that's a wealth of knowledge and insight to tap into. If you're in a plumbing business, they've probably seen a few plumbing companies.
All businesses still, they carry the same commonalities of success too. Just because you're selling something different or a service or a physical product, it's still, accounting's still the same. Yep. You still got to know your numbers, your operations, your cost of goods, your risk. All of that still goes from each industry over and over
That's right.
again.
And we try to cover a lot of that here on Expandable, where we're basically mapping these insights and the wisdom, practical wisdom across, for anyone to kind of consume. But when it comes to, let's say you have a plumbing company or you have a widget manufacturer, manufacturing company or something, and you need help for growth, well, that's where that insight from a banker that has worked with a plumbing company or a widget manufacturer before can tell you, hey, we've seen all this stuff fail. You probably want to stay away from that. These are the things that if you have these things in order, you're going to succeed.
Yeah.
It's not really financial advisory and it's really not like business advisory, but it is at the same time. It's you're coming to me looking to expand.
Well,
let me look at your financials like I've looked at 1,000 before.
There's a good law out there that is called predatory lending. So, I mean, bankers, we have fiduciary liability. And where that predatory lending comes in is, we can't knowingly make a loan that we know is going to default just because we want that underlying collateral.
Yeah, right.
It's Okay, that they inherited that $1 million piece of property. Yeah, we'll finance $400,000 and balloon it in 1 year, knowing that they can't pay it. They got bad credit, and they have no recurring income, and they inherited that property.
Yeah, that's a good example.
That's predatory.
Of using what you are your wisdom and knowledge for bad.
Yes.
Yeah.
So find bankers too that are happy if you don't borrow from them.
Yes.
They're not always trying to push you to borrow.
They're like, wait, let's talk a little bit before you do this.
Correct.
Instead of, here are our
now you're
rates.
making, you don't borrow money until you've got a proven product, you're making money, and now you're, getting better efficiencies and growth. So, find those.
If you go right to the rate conversation, then it may not be the best fit. I mean, it may not get you really where you want to go unless you have all your ducks in a row and all you care about is rate. And you don't want anything else from that banker.
Correct.
That's really the only way it's going to work. And generally, that's not the case.
And sometimes the ones that I see that they're immediately like rate, it's like, quote the rate to you. I have no idea what financials you have, what assets you have. Like, you're going to be in this range. No, I can buy this house for, and get 5%. Okay, well, great. And go do that.
Yeah, right. Yeah, don't come to it defensively like you're going to have an argument about it, because you're coming to gain some kind of, you're coming to be edified in some way. You're not coming to educate them, essentially. It's like I think the main point here is that if the banker knows and seeks to know your individual business and how it operates and the goals that you have for your business and where you're going with everything as it relates to your finances, that's a good banker to be talking to.
Yeah.
If they don't really know a lot about your business, and you're going to see this the bigger the bank goes typically, then those conversations you're helping them. They're not helping you.
Yes.
I mean, you're giving them their money, you're paying their rates, you're holding their money with their bank, but they're really not giving. There's no reciprocity there.
No. And there used to be a discrepancy years ago when big banks had, more efficient treasury technology and more efficient wires and all that.
Yeah.
That gap is now closed.
Right.
So there's really nothing, 90% of, 99% of community banks can do anything the big banks can do.
That's right.
Generally, for what you need, unless you're just a multinational conglomerate.
Sure. And I think this makes a lot of sense on the commercial loan level, because you're talking more about practical wisdom that can be transferred. But on the practical day-to-day side, on the banking side, I think it makes sense too, because even those accounts that are business checking accounts, everyone has to have one. Everyone uses one every single day. Well, the problem is when something goes wrong. It's not about the account itself. You can get one anywhere and probably pay no fees, and probably everything's pretty much about the same. But when something goes wrong, then what? Are they really in your camp? And do they understand how cash flows through your business? Because if they understand that you do a lot of cash transactions, they understand what that looks like. And they even know Marjorie, who brings the cash to the bank, and they understand you more intimately, then there's going to be an advantage there for you for growth, because there just is.
I saw, there's these selling YouTubers I follow, and they were out of the country and their card didn't work. They thought there was fraud on it. Okay, good. They had alert. The bank had alert. They were in a different country. They're all jumping back and forth. So, I mean, that's a likely scenario.
Mm-hmm.
And so they called back the bank, and the bank couldn't verify their identity. They said, you must come into an office.
They're in like the middle of the ocean somewhere.
Yeah, they're in South America. Can't even get gas to get back. And actually had to, the spouse had to fly back to, yes. They couldn't identify. I mean, are you kidding me? So you're telling me you couldn't ask enough questions to identify the reason you had reasonable belief of that is your customer.
Yeah.
But yet you're relying on a $15 hour clerk to say, yo, that is the person in front of me.
Mm-hmm. That's crazy.
Yeah. So
I can't believe that.
Yeah. I logged that episode. That was a couple years ago when I saw that, and I just was like, "Oh my goodness!" They had no idea.
That's the perfect example, because really it is the taking it on the volition of the
you could have just
employee to say,
looked at their YouTube channel and have verified it.
We get what's going on here. Let me just take a little bit more time to ask another question, or maybe I can check to see if there are more questions.
And spent that bank more money,
by
paying.
If they're still banking
the branch
with them,
just to see that.
Yeah. That's ridiculous.
Yeah, instead of verifying it. The fraud department could have just gone to their YouTube channel. Oh yeah, they're in Curacao. Here we see the transactions.
Yeah. Yeah. The banking relationship doesn't need to be like insurance. It needs, and out of sight, out of mind until something breaks. It needs to be a little bit more close. There needs a closer relationship.
And the other thing that is a complete misnomer, when people want to be like, oh, I want to open up an account with speed. So you're telling me you think it's a good idea that you can open up an account that has your social security number, your address, your driver's license verification in seconds, and you're good with that?
Yeah.
If the bank has such a fast onboarding and you're not a customer there, if you're already an existing customer,
right,
that's one thing. They can already identify you and can expedite. But if it's the barriers of entry are so light to open up an account with that institution, just know when there is an issue, you will not get a hold of anyone.
That's right.
Because there's so much fraud that is going to go onto that bank because so many fraudulent accounts are being opened that they're spending an inordinate amount of time having to close down accounts and worry about fraudulent bill pay and everything.
If it's lean on the front
real
end,
customers that have issues, good luck.
If it's lean on the front end, it's going to be lean on the back end.
Absolutely.
Yeah.
Otherwise they cannot make any money.
Yeah. Yeah, that's it. I think on the proactive side, we said it kind of at the beginning, this idea of a strategic partner, we really talked about a lot, but being a resource too. This YouTube show is a resource, and that's partially why we do this, is to give over growth insights and things to extend that from the bank.
Yeah, and if you're listening to us and you're not
customer
in Central Florida, find a community bank in that area.
Right. Or call us and we'll help you find one.
Yeah, I'd be glad to. Right? We have community bankers all over the nation, and they're fantastic banks. Yeah. And more importantly, if you can find a bank that is set up as a subchapter S, those are the smaller ones that they take pride.
Yeah.
The owners, the board of directors have their stake in it. They're not trying to ultra leverage money like private equity firms.
Yeah.
And the percentage of subchapter S banks that have ever closed is so minuscule compared to the corporate.
Yep. Yeah, they're there every single day poring over all the ins and outs of what's happening with their customers because they have something personally at stake. The bigger you go, the less people have less at stake. And that should be pretty much all you need to know.
And the bigger you go, you've got an individual, maybe they're making, I don't know, that middle manager, maybe making, mid six figures. I don't know what they make. But then they're going to leverage $1 billion for them to make an extra $20,000, $50,000.
That's right.
So that risk,
what's their risk?
$50,000 huge to them.
The risk is they get fired.
Correct.
That's it. I mean, the bank still has to.
Probably not. Yeah, it's not coming back on them personally for losing everybody's money.
Right.
Great. Okay, they got another job. You can't. They'll come up with some story of why they left.
Yeah.
And go to another one.
Yeah. Yeah, well, so strategic partner, being a resource, if you can't obviously see these things, they're not very known to you right away, then that's probably a red flag that's how it's going to be, if not worse, whenever something comes to fruition that is negative with your account.
Yep.
So, yeah.
And if you get it, yeah.
I mean, I think that if people are looking for a bank, for them to reach out to Surety to find one, even if they're not here, I think that's a good call because, again, we're a resource.
Yeah.
So, there's no reason why we can't connect people.
Yeah, absolutely. Rising tide raises all ships. So
that's right.
Let's do it.
All right. Good.